Welcome back to EDS, and in this video I'm going to show you how to manage your positions once you've placed them when it comes to writing options contracts or selling options contracts. Those terms are interchangeable. So we're going to do a little portfolio review. It's a Sunday, and on a Sunday we do like to do a little portfolio review, and I'll give you any updates on any adjustments that we've made, any positions, changes in positions, etc., that kind of stuff. So this is what our portfolio looks like. This is a very small example portfolio account that I just used to simply put on positions and literally just for example purposes. So don't pay too much mind to diversification, that kind of stuff. It's more just for position by position basis. We're not really going to be manage this on a portfolio level, but more on a position level. So first thing we've got here, you'll notice from the last portfolio review, we closed out the British Pound Futures Iron Condor in a nice profit. We closed out our GLD Iron Condor in a nice profit as well. We redeployed capital with EWZ, but we'll go over that in a second. So we've got Tesla at 35.9% of the way to max profit, Palantir 25.5% of the way to max profit. We've got EWZ, which we've just put on, basically sitting at break even. We've got the Euro futures at practically break even again. We've got NVO and the Canadian dollar futures sitting slightly in the red. However, it's recovered quite nicely over this past week. It was much worse 2 weeks ago, so hopefully we can see things continue to move back in the right direction. So let's go one by one. So we've got Tesla first. We've been in this position for 20 days. There's 19 days left to expiration on this position. We're just going to let it run for a little bit longer, let theta decay a little bit more. This is the position that we have on. It's an Iron Condor, and if we just go over to the chart and see what it looks like, so this is the position. This is our short put over here at 345, and we have our short call up top at 485. Price is currently at 431, just over 431. So a little bit closer to the call side. However, 20 days in, this isn't bad at all. Everything is fine. The position, the price of Tesla is still within our short strike range, so everything is working absolutely fine as planned. Hopefully we'll get an opportunity to close this position out in this coming week for some nice profit. Next up we've got Palantir. We've been in this position for 17 days. We've got 19 days left on it to go. Again, an Iron Condor. Let's take a look at the chart. So with Palantir, we're again still within our short strike range. We have our short put at 65 and our short call at 85. Price is currently just over $79 a share. Price is slightly skewed towards the call side, but again, that's completely fine. There isn't anything to be done here. We've still got plenty of room. We're not anywhere near a level where we need to be concerned. This is a covered position. It's an Iron Condor, so we wouldn't need to be concerned anyway because we've defined our risk and managed our risk upon entry. And I'm going to show you how that differs with a naked position a little bit further on. But again, with Palantir, there's absolutely nothing to do here. Hopefully, again, same as with Tesla, we can see we'll be looking to see if we can exit this position over this coming week for a nice profit. Next up, we've got EWZ. EWZ is a strangle, not an Iron Condor. We took some of the capital that we were able to free up from closing the recent positions, and we redeployed that into an EWZ strangle. EWZ is the Brazil ETF. So with ETFs, you don't have company risk, therefore you typically end up with smoother P&Ls, smoother profit curves. And this is a naked position. It is a strangle. So we opted for the higher probabilities of success. So our return on capital isn't as high as what the return of capital would be with the other Iron Condors that we have on in the portfolio. However, with this being a strangle, we we are looking at much higher probabilities of success. We're in the high 80s, low 90% probability of success on this position. So we've just put this on 2 days ago. We've got 54 days left on the contract. Let's have a look at EWZ. This is the position as it currently stands. There's been a little bit of a sell-off which raised volatility, implied volatility. We have our short call sitting at $20, and we have our our short put sitting at $20, and our short call sitting at $26. Price is currently at 22.56. So price is literally smack bang in the middle of our range. We've only just put this position on. There really is nothing that needs to be done in this position. We have a very wide range set up. It is an unlimited loss potential on this position. Of course, that is the nature of a naked position, similar to a strangle. However, we're not worried about the unlimited loss potential. A lot would have to happen in order for us to take an unlimited loss, and with it being a naked position, we are free to manage risk much more effectively than with a covered position. We can roll the untested side, we can turn it into a straddle, we can invert if we need to, we can buy the gut, sell the wings. There's so many things that we can do to manage risk, which is why if you've watched any of our videos previously, anytime we refer to an unlimited loss, you wouldn't, as long as you know how to manage risk, you're not gonna be forced to take an unlimited loss in any scenario, especially if you're following our position sizing template as well. So with EWZ, nothing to do here, everything looks good. It's a fresh position. We've got the Euro futures here, currently again sitting at break even, down 6%, but it's practically break even. The Euro futures, we've been in this position for 24 days. We've got 40 days still left on this contract. It is an iron condor. Let's have a look at the Euro futures. This is a much more interesting scenario. We have our short put at the 1.035 level and our short call at 1.09. Price is currently sitting at 1.046. So we are skewed towards the put side. However, price has kind of gone sideways, dropped down a little bit. It seems to be recovering slightly. Obviously, I mean, we're basically at break even. Price is much closer to our put than it is to our call, which is causing a problem with our P&L. However, because we've had that nice theta decay, we've had time decay working on our side, decaying away the value of the contract, even though price has moved against us, we could still get out of this position at basically break even. This is the power of selling contracts or writing contracts. Even if price moves against you, there's still other factors. Delta is just one part of the equation to calculate options prices. By all means, have a look at the Black-Scholes model. Feel free to look that up. It's a theoretical price model on option pricing. But yeah, again, with the Euro futures, we've still not breached our strikes. We're still within our strikes, even though price has moved slightly against us. In an ideal world, we would want price to not move at all, but of course that's not going to happen. So price will move in one direction or the other, just as long as it doesn't move too far in any one direction. And in this situation, it hasn't moved too far. We're still within our range. We're sitting nicely at break even. We've had time decay on our side. We've still got time decay on our side. The closer we get to expiration, the more aggressive time decay will become. And again, there is nothing to do on this situation. We have our risk defined. It is a covered position. It's an iron condor. So everything looks good. MVO. Let's have a look at MVO. So MVO is an interesting one. We're currently sitting in the red slightly at just under 80%. We've been in this position for 32 days. We've got 19 days left on this contract. It is an iron condor position. We have 2 legs in the money right now. So let's have a look at NVO. So this is around when we put the position on. And if you remember from last week's portfolio review, we had a look at MVO, and we mentioned that MVO overnight just completely gapped down There was no way to predict it. There was nothing to do. However, we're not worried, and the reason why we're not worried is because this is a covered position. Our risk is defined. Our short put is at 95, and our short call is just here at 90. So we've defined our risk upon entry. So even if the price of MVO goes to zero, we're fine. The amount of money that we are prepared to lose was set and defined upon entry on this position. So it doesn't matter now what MVO does. Of course, there is still a chance that MVO can come back into our range. We've still got however many days it was left on the contract, 19, 20 days. So there's still plenty of time. And MVO is only trading at 87.37. And our long put, sorry, I don't know if I mentioned it the right way around. Our short put is at 95 and our long put is at 90. So we're less than $3 away from being back within our short and long spread. And at that point, as long as we're above the long put, we won't be forced to take a max loss. We'll just be playing for break-evens, basically. Well, we won't be playing for break-evens, but we'll just be playing for wherever the price lands between the spread. And then if price goes above our short put, then we're back in the money again. Well, out of the money technically, but our P&L is going to be green, is what I meant. So with MVO, again, I'm really happy that we went with a covered position. Again, this was an overnight move. It just gapped down. There's nothing that could be done. It happened too fast. We couldn't follow the market with the untested side. We couldn't really roll down the short call. The premium was just too thin, and we'd be giving up quite a large percentage of the probability of success for this position. So we opted to just leave it as is. And quite often, the right thing to do is just leave a position. Leave it alone. Especially if it's a covered position. If it's a naked position, generally speaking, when it comes to making adjustments, the earlier the better. But with a covered position, that's with naked position, sorry, but with a covered position, it's best to just leave things alone. As mentioned, we've still got plenty of time. Hopefully we can see price rebound a little bit. And hopefully we'll still be able to work this position back to a break even or even a small profit. Finally, we've got the Canadian dollar futures. The Canadian dollar futures, let's go back. The Canadian dollar futures is again an iron condor position. We've been in this position for 30 days. We've still got 40 days left on this position. So long, this is a long dated contract. Let's have a look at the chart for the Canadian dollar futures. So we've got our short put at 0.7 and we have our long put at 0.695, which is 0.695, which is just here. So as you can see, the Canadian dollar has pretty much just come right the way down. It's breached our short put. However, it hasn't breached our long put. So even though price has moved against us, if we were at expiration today, right now, we wouldn't be forced to take the max loss. The amount of loss that we would take would actually be quite small because we collected quite a bit of premium on this position upon entry. But again, the position hasn't really moved against us too far. We've still got plenty of time left on the contract, and it's perfectly feasible that price just moves back into our range. I mean, if you have a look, price has pretty much just gone straight down without much of a relief or much of a break since since about September, October time. So it's perfectly reasonable that price can just go back into our range. But even as it currently stands, we're not in a bad position. Price hasn't moved too far away from us. So again, with the Canadian dollar futures, there's nothing to do. It is a covered position. So there's definitely really nothing to do here. It's just a simple case of waiting and just being patient. This is the reality of what it looks like. quite oftentimes price can breach your strikes but then come back. So there's nothing to do here. Everything is defined upon entry. There's only one other thing that you need to keep in mind, and that is the size of your positions. That's very important for when it comes to managing positions, is the size of your position upon entry. We've got a free position sizing template that's free for everyone to use. The link is in the description. The way it works is you enter in the size of your portfolio, and then you enter in whatever the current VIX level is, and everything below will then be automatically calculated for you. You simply just need to use this information to form the backbone of your portfolio, and over the long run you'll be absolutely fine. You won't run into any major problems. If you would like to learn in more detail about what we do and how we do it, again, link will be in the description. This time click on EDS Premium. Get yourself signed up. Inside you'll have access to our portfolios that allow you to see the positions that we're placing, how we're managing risk, how we're making adjustments, all in real time. There is a full course, so no prior knowledge is required. We will teach you everything that you need to know. If you get stuck, you can speak with myself directly or with other like-minded individuals. It is a private community, and after 6 months, if you have not been profitable and you've been through the course, then we will work with you for free until you are profitable, or we will send you a full refund. So it's completely risk-free, 100% money-back guarantee. The price to join right now is £1 a month. It's so cheap because we've just launched. The price will be increasing. However, once you're in, the price is locked in for you for life. So you are definitely rewarded for getting in early. And the aim of EDS Premium is to get you to a point in 6 to 12 months to where you know how to write options contracts, you know how to manage your risk, you know how to make adjustments to your positions, you know how to do everything without any external help or influence within 6 to 12 months. It's a skill that no one can take away from you, and you can keep it with you for the rest of your life. You're always welcome to stay and be a part of the community. However, within 6 to 12 months, you should be good to go. So with that being said, I will see you guys on the inside.